Okay.
Yeah.
Okay. So let's discuss the
Please go
intercompany.
on mute if somebody is not talking.
Okay. So what exactly the intercompany transactions? What are these transactions? So let's discuss something about the intercompany transactions and we will proceed from there. So we have a group company. In SAP, we call it as company. In SAP, we call it as company. Right. Under this company, we have different company codes. Okay. Company code 1, company code 2, right? So company code 3, so on and so forth. We have different company codes covering different locations across the globe. Now, it does not mean to have in different countries, even in the same company, if you have a different company, if you have a different legal entity, that is considered as a separate company code. Okay, now there are certain situations, right, where we can find, where we can see a transaction is happening between these two company codes. It means company code may sell goods to company code 2. It means company code 2 may buy goods from company code 1. So between the company codes, we may have certain transactions, purchases, sales, expenses, you know, company code 1 expenses will be paid by company code 2. So when you have a transaction covering two different company codes, that's where, this company code intercompany transactions come into picture. So typically in what case we will consider? So normally, most of the cases we will see one company code will sell goods, the other company code will buy the goods. Whether selling and buying at the marketplace or at the cost price, that's the, the internal call between the two company codes. What price to consider? Let's say company code 1 selling goods $100 per cage per unit, $100 in the market. This company code may sell at the same $100 to this, or maybe less, or maybe more, or maybe same. It can be of anything. So that's totally their policy. That's the individual company code's discretion. I mean, the group, normally group company code will decide that part. So that is immaterial for us. Now, basically what is happening is, as I said, intercompany transactions basically happen between, in the case of purchases and sales. So one company code will sell goods, the other company code will purchase the goods. That's where this thing happens. So in order to do these purchases and sales between these two company codes, the typical scenario going to be, in company code, let's say company code is selling goods. So the company code 1 will do the entire sales cycle, and company code 2 is buying the goods. So we will have to do purchase cycle. This is what the normal sequence. Okay, when one company code is selling goods to the other company codes, it will consider as a sales cycle. It means the other company code will be considered as a customer for company code 1 and will create a sales cycle. Similarly, company code 2, when company code 2 is buying the goods from company code 1, so in company code 2, company code 1 will be a vendor. It will create a vendor with the name of company code 1, and it does the purchase cycle. So ultimately what happens here, we have sales cycle, here we have purchase cycle. There is another tool called intercompany reconciliation. ICR. It is called as ICR. ICR tool. Okay, ICR tool. So there is another tool called intercompany reconciliation. With the help of this tool, we can we can reconcile between these two company code. The transactions happened between these two company code will be reconciled using this ICR tool. So this is what the normal scenario, the normal process. But apart from that, without considering the ICR tool, we can also do a reconciliations. How do we do? It means what are we doing here? Company code one will do as complete sales cycle. Company code two will do purchase cycle. These two transactions are happening individually in each of these company codes. Instead, we can do another kind of transactions, right? So what I will do, I will say debit expenses and credit bank check issue or something. Now, at the time of entering the debit item, what I will do, I will say company code one related cost center, thereby cost center one will come, company code will one will be here on the debit side. And on the credit side, we will enter company code two. Okay, so one line item is with one company code, the other line item is with another company code. So normally in all earlier scenarios, what we used to do, we used to post expenses, CC, PC, and company code one. Similarly, here on the credit side, bank account with the same company code. This, the, these are the transactions that we discuss until now. But if at all you have any intercompany transaction, so what is happening here? It means according to this transaction, company code 2 is paying expenses relevant to company code 1. So company code 1 supposed to pay some expenses and company code 1 is not doing that. Company code 2 is making the payment on behalf of company code 1. So what is happening typically here? In this transaction, debit is hitting with one company code and credit is hitting another company code. That's where the intercompany will come into picture. And if you really want this, we have a configuration that requires to be done. Why do we require a configuration? So I'll just take this transaction. I'll just copy it here and here cost center one, let us assume, and profit center one. Since the document splitting is happening at the profit center level, okay, profit center becomes the mandatory, so we have profit center. The same will be copied onto the other line item if you don't enter any profit center. So profit center one will appear over here. But normally what happens, what is the problem in this case is this profit center one, while creating the profit center one, we might have activated for one company code only. Typically, if you have one company code, normally you don't require to create, you know, you normally you don't require to maintain this thing. It happens automatically. But when you have multiple company codes, then while creating the profit center, which company codes that are required to be considered for this profit center, that is what we will have to check. That is what we will have to check. Now, accordingly, we will have to do. Now, in this case, the problem is if the profit center one is activated only for this company code, then what's the problem? This profit center is not activated for company code 2, then this profit center will not be derived to the credit line item. Then system will throw up an error. So in order to meet this, we have some other options. I'll show you the error. Then after that, we will do the postings. We will do the posting. You will understand that part clearly. Now, the point here is, let's say profit center one, here it is derived. Now, these two are with company code 1 and company code 2. Now, of course, profit center 1, there is no problem. We will have to balance our journal entries at the profit center level. It is happening, but not at the company code level. It is not happening at the company code level. So in order to equalize here, since it is a debit item, we require one credit item. We require one credit GL. And here the credit item with company code 2, we require one debit item to this. One debit item to this in order to equalize at a company code level. Okay, at a company code level, we will have to equalize. So the original transaction debit I have picked up here for company code 1 and credit I have picked up here for company code 2. Now profit center wise, there is no problem, but at a company code level, we have a difference. On the debit side, we have company code 1 and on the credit side, we have company code 2. How can we reconcile them? So in order to do this, in order to have a credit item over here and a debit item over here, we need one GL account called intercompany clearing account. You can keep any name, intercompany clearing account. Okay, we require one balance sheet GL as intercompany clearing account, so that with the help of this intercompany clearing account, the balance at the company code will be maintained. The balance at the company code will be maintained. And of course, at the group level, here it is credit and here it is debit, that will be nullified. So there is no problem at the group level, but individually at the company level, at the company code level, in order to do this reconciliation, we require one clearing account. So this intercompany clearing account is the one that we will have to maintain in our configuration. Okay, so this is about basically the intercompany thing. Any questions?
So Nanda, like profit center, that you said, we have to activate in both the company code. In this example, profit center one,
Mhm.
which is activated for company code one, same time we have to activate it in profit center one in a company code two, right? If we have not activated in a company code two, then system will throw the
Throw up
error.
an error. Yes,
Okay,
yes.
I see.
We will see that. We
Okay,
will
okay.
see that part. Okay, so this is basically the intercompany thing. Now, the important, we will see. What I have done, I have created a company code and assigned to our controlling area 1248. 1248. So this is our controlling area. And if you see assignment of company codes, you can see 1248 and 1284. As soon as we see a company code, multiple company codes within the controlling area, then our cost center master, profit center master, you can see something. KS03, if I take controlling area 1248, our controlling area is 1248. Let me say 1000 cost center. Now here you can see a company code field. This was not a field at all if we had only one company code to particular controlling area. Okay, so you can see a field called company code. Of course, by default, it picked up the existing company code, so it took that. Then, if you go into the profit center, KE53, now you can see here company codes, then it is activated for both. Now, what I'll do, I will just deactivate that for this company code so that we can see an error. Okay, I'm just saving. Done. Now, if you see over here, this profit center is activated only for this company code. Okay, so when you have multiple company codes under this controlling area, this company code tab becomes the prominence. Okay, so whether you want to activate the profit center for one company code, or you want to activate the profit center to multiple company codes, that's again the business call. Okay, now I'm just saving here. Okay, I'm saving here. Okay, so the profit center is activated for one company code and cost center is also activated for one company code. Now we have to do a company intercompany clearing account, right? That configuration. So in order to do that, firstly, we will have to create one what do you call one GL account. So let me go into 1248 company code and let's create one intercompany clearing account. So what I'll do, I'll take 1,50,000, 1,50,000. I will say here intercompany clearing. Okay, so this is going to be control tab, and this is normal like your liability account. So it cannot be a reconciliation account or something. Okay, I'm just saving now. So we got 1,50,000. It is created in company code 1248. Similarly, we will create the same GL in 1284 also. You can use the same code, or if you want, you can use a different code. But people normally use the same code so that it becomes easy. Okay, intercompany clearing account. Just save. So we got intercompany clearing account on both sides. I mean, for both the company codes. Now we have a configuration we will have to maintain now this intercompany clearing account. Okay, so I'm going into financial accounting, general ledger, periodic processing. Yes, here we have prepare cross company code transactions, OBYA. This is also one of the important transaction codes. OBYA, prepare cross company code transactions. Path for this is IMG, financial accounting, general ledger accounting, business transactions, prepare cross company code transactions. Just execute. Here we need to enter two company codes. What are the two company codes? Maybe we have multiple company codes. Let's say we have three company codes in this example, right? Company code 1, company code 2. So the transactions are happening between company code 1 and 2, company code 1 and 3, company code 2 and company code 3. If these transactions are happening, you need to create separately for each of these combinations. It means how many combinations are going to come? Company code 1, company code 2. This is one combination. Company code 1, company code 3. This is the second combination. And what is going to be the third combination? Company code 2, company code 3. Okay, so all these three combinations have to be maintained. Suppose if you have some more, then according you will have to do. Suppose I have company code 1, 2, 3, 4, 5, and let's say 6. I have operations between 1 with 2, one combination, 1 with 3, second combination, 1 with 4, third combination, 1 with 6. I don't have any combination. I don't have any business with 5. So I have with 6 the fourth combination. And similarly with the 2 I have with the 2 I have one already I've considered. Then 2 to 3, one combination, 2 to 4, 2 to 5, 2 to 6. So whatever are the combinations that we have here, all have to be maintained over here. So since in our example, we have only two company codes, I'm just taking two company codes, 1248 and 1284. So here, company code 1, company code 2. So you may have situation, company code 1 to company code 2. You may have a transfer from this company code to this company code, or you may have 1284 to 1248. You may have the other way also, right? So here you have two options, 1248 to 1248 to 1284 and 1284 to 1248. So we have two combinations, reciprocal process. Okay, now here debit posting key and credit posting key, and the intercompany clearing account is the one that we will have to consider here. So since it is a GL, so GL debit is going to be 40, and I think 1,40,000 or 50 something we have created. Yeah, 1,50,000. So similarly, this is for debit, this is for credit, and the GL is going to be this. And receivables, okay, here it is debit, here debit posting key, here also debit posting key, and here account, and credit going to be 50, and again the GL account. Okay, we have maintained the GL account. So whatever the intercompany, in our example, we can see one credit item, we can see one debit item. Those GLs will be picked up from here itself. And in our case, we have maintained the same GL for all. Sometimes in some cases, in some business scenario, they may want separate GLs. So accordingly, we will have to create them and put it over here. That's it. This is the only configuration step that we have. Okay, so now let me do one thing. Let me go and create a post a transaction. Let me post a transaction. How do I post? I'm going into FDAS02. Okay, I'm taking 22 September 2019. This is one company code 1248. I'm posting 1248. So 1248 we have here. It means debit GL is relevant to this company code. Let's take 4 lakh GL. So debit 4 lakh GL, and I'm saying 15,000. I'm selecting cost center 1050 here. So far we have considered 40. In this 40, the company code is 1248. Now we will see here company code going to be 1284. So debit is hitting this company code and credit is going to hit this company code. Okay, so debit with company code, one company code, credit with another company code. Just enter here, put the same amount, value date going to be today's date. Okay, press enter and just simulate. Company ID missing. Oh, okay, configuration is missing. Small configuration. I mean, as I said, right? So 1284 is 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 another company code, right? So enterprise structure, assignment, financial accounting, company code to company 1284 has 1248. Or you can have a different company as well. There is no hard and fast rule to consider the same. You can have a different company code also. Okay, back. So go to the transaction again, FB50, take it. So F dash 02, let's post first F dash 02, 1248, 40. So some amount cost center and here 50 and amount is 2,20,000 and company code is going to be 1284. Okay, press enter, take the amount, take the value date and go to document and simulate. Why AUD came in? Okay, so I'm just going into FS00, 1,50,000. Here we have AUD. This is for 1284 and similarly 1248. Change and keep USD. Save it. Go back to FB50. So F-02. One two four eight 40 cost center posting key 50 2,20,000 and company code 1284. Okay, value date is today's date. Go to document, simulate. Let's see if at all we have it. So no error now. If you see over here, I'll show you that. I'm just saving now. No postings can be made to the profit center 1000 in company code 1284. So this is what I was explaining. So profit center 1000 is not activated to company code 1248. So you can see this error. Okay, there are two solutions for this. Okay, let's see. Let us go back here and do KE52. Go to KE52, take 1000 profit center, go to company code and activate the relevant company code. This is one option. Of course, this is the best option, but sometimes business does not want a profit center is activated to multiple company codes. One profit center is activated to one company code only. If they have that scenario, that condition, we will not be activating it over here. Then what we will have to do in such a case, we have another transaction code called FAGL3KEH. This transaction code specifies the default profit center. Now what we will have to do, 1284 is the other company code, right? And there we are considering 2,20,000, 2,20,000, and we will have to create a profit center within this company code. In 1284, we will have to create one profit center and assign it over here. So system will pick that up automatically. If when are we going to come here? When we don't have it, means business does not have a provision to activate the profit center to multiple company codes, then only we will have to make a default profit center here in the FAGL3KEH. If the option is to have multiple company codes to a profit center, that is the best option. Any questions? So it means we will have to create a profit center within this company code 1284 and maintain over here. Why do we require? Because we are posting a transaction, debit expenses, credit bank account 2,20,000, right? And here 4 lakhs, and this has got a CC1, I mean 1000 cost center and 1000 profit center, whereas this is 1248 company code, here 1284 company code. This 1000 is not being carried out to the other line item because this profit center is activated to this company code only. If you activate this profit center to this company code also, then the same 1000 will be derived over here, automatically it happens. If this profit center is not activated to this company code, what we will have to do, whatever the GL we are considering here, the same has to be considered in FAGL3KH and create one profit center in this company code and assign it over here. We will have to consider the credit GL and assign the default profit center created for this company code. Any questions?
So the inheritance, will not work, right? The company doesn't want
Definitely,
to
definitely,
inheritance. Okay.
definitely it will not work because you are restricting at the
Right.
company profit center master data.
Otherwise, that it just applies the inheritance rules, right? When we
Correct,
do.
correct. Okay, so that is the I mean this is the option. So basically we have got two options. One is extending the profit center to the other company codes. The other one, we have the second option is maintaining a default profit center for all those GLs which we are going to consider.
So Nanta, most of the time in a company, which route company goes to,
This
like,
profit center, but of course there are other company codes where you know uh, I mean business does not want to activate or extend to multiple company codes. So then FAGL3KH is the only option. There is no other option. Clear?
Yes.
Now let's post this transaction now. 2209 1248. You can consider 1284 here, then there 1248. You can consider in any way. 4 lakhs, amount is 15,000, cost center is 1,000, and here posting key is 50, taking 2,20,000, and company code is going to be 1284. So value date is going to be this. Press enter, go to document, simulate, and save. It is happening now. Okay, now we have one document number. Where is that? I did not see that at all. Okay, that's fine. We can see here. Okay, this is in the company code 1248. Right? This is in the company code of 1248. 1248. Now, if I go into FB03, I can have 1248 and 1284 also. Okay, so the number is not going to be the same. Okay, the document number is not going to be the same for both the company codes. It will never be, but occasionally, I mean, uh, occasionally both may have the same, but it will never match. So I'm just executing. I'll say entry date is today's date, or I will say posting date as 22nd September 2019. So I got these two. Okay, so here I think this is the one. Yes, Bank of America Intercompany. So 1 lakh 1 all zeros 1 is the document number in this company code. Now, if you see over here, you have one field called cross company code number. This is the document number. Just double click on this. It will give you the complete history. 1248, the translation date, amount is this. 1284, translation date is this, amount is this. Now you can see the complete information. So debit and this is the credit. These are the items that we have posted, right? 15,000 here, 15,000 or here. Here debit, here credit. Now for this debit, there is a credit with clearing account. For this credit, there is a debit with an intercompany clearing account. If you see here, transaction is BUV. The same transaction can be seen here in the intercompany this thing. Yeah, here prepare cross company code translation. So 1248, 1284, you can see here BUV. The same you can find it over here. It picked up from BUV. So here debited, in order to clear that, we have a credit here. And here it is a credit. In order to clear it, there is a debit. Any questions or
Nanda,
any,
Nanda, where is that cross company number, system gets from? Like cross company, yeah, that number. And what is the document type for that? Okay, the document type is
so
SA, I can see.
it's not a document type. I think it, I'm not sure. Yeah, whatever you're asking is, I think it is going to be a dynamic number or something. This may be a dynamic number because we don't, what do you call, we don't maintain any number range for
Yeah, that
cross
is what
company codes. We
Yeah,
don't maintain any number range here. Cross company.
yeah. Usually, if you
Probably
don't, yeah, if you don't define the number range, system will throw an error that number range is not defined. But in this,
correct.
uh,
I don't think we will have any number for this, but yeah, whatever you said is correct. I never I never thought about that actually.
and the document type, it's a essay.
Yeah, SA why? Because we have entered in F-02,
Okay.
right? So it picked up from there automatically. But this is what basically the intercompany.
Oh, oh, I see. Okay, so first number and 1248, there's a company code, and 19 is the fiscal year.
Okay. And
Yeah,
how about 10066, which is the number?
that we don't know.
I think this may be the number range.
Yeah, that is from the essay document types.
Probably. Yeah.
Yeah. Yes, yes, yes.
FBN1.
Yeah,
You
can you
can
see?
go
Yeah.
here.
Okay. I mean, it is better to understand, how is this?
Correct. 1248. SA, right?
Yeah,
Oh,
66. See if you can see.
yeah.
Yeah, that's
Yeah,
the one.
right.
And
Right.
then, company code and that fiscal year 19
Okay.
only. Yeah, that's what it is.
But why the other company code is not coming in picture?
No,
SA is this thing.
that will be reference to the another company code 1248, and that another would be 1284. See here, you can say
1248 only.
1248. The starting point was 1248. We made entry in the company code 1248.
Yeah, this is the one. 1248. It's coming the same thing. In both the cases, it's coming the same thing.
Yeah, because we just started with the 1248. We initially
Probably that is considering the same.
correct.
So this is the number followed by company code followed by fiscal year.
Yes.
Probably, yeah. So why it is not coming in case of 1284?
Now, if you enter 1284, then it will reference to 1284.
No, it's not coming that. Still it is saying the same.
No, what I mean to say that if you pass entry into company code 1284, then it will.
Okay. So here in this case,
Yes.
you mean to say it is going to be 1284.
Yes. Yes.
Okay.
Yeah.
Probably. Yeah. I'm not sure about that part. Okay. So this is basically the intercompany transaction. Any questions?
No.
Okay, so I think that's all at the moment because the fixed asset is not at all happening. We are good on we are fine with the intercompany thing, but in order to run this intercompany asset transaction, um, you know, finding a lot of issues. Basically, the other day we have seen, right? So I'm not at all getting any clue on that. So I'll see them. Otherwise, we can keep them aside at the moment. We can start the controlling from tomorrow. If
And
I have any clue, we can continue tomorrow fixed assets. If I don't have any clue, we can continue the controlling area. And as soon as we are free from one topic, then we will jump onto here and we will continue.
Nanda,
Mm.
what I was saying, that before you start the controlling, are we gonna cover like what is that MM2 finance and SD2 finance?
We will have to do the
Integrations.
in the
Okay,
product
but
costing. In the product costing, before we start the product costing, we will be doing that.
so that
MMSD. MMSD PP.
And PP. Okay, that also comes under the GRIR account and all this, right?
That comes in MM side. That comes in MM.
Okay. So like so GRIR, that purchase order and do GRIR, that will all comes under, but it doesn't come under. I know it is come under MM, but when we do the integrations, between MM and finance, do we just go touch basis that, what is that include?